Not long ago, this entire area was farmland. Now, it's a case study for how cruel the Chinese housing boom can be. Many here struck a deal with a developer, their land in exchange for new homes in the high-rises sprouting up. 8 years later, the homes aren't finished, the people here still stranded.
The Chinese real estate market for so long was a driver of growth. Now it's a liability. Hey, what's going on, guys? True Pre here. And in this video, I'm going to tell you exactly what problems the Chinese real estate market has. How is China going to face this problem? What are they going to do to their real estate market? On top of that, how does the Chinese people get affected that are living in China, and how are they affected? Also, on top of that, in this video, I'm going to tell you how the real estate market at home can be compared between China and America. So we'll do that in this video. So please make sure to like and subscribe. Let's get into it. So what is the problem? A country like China who's been doing double-digit growth numbers for so long, how can they mess up so bad? This is what happened. For a long time, real estate was a major driver of China's economic growth. It accounted for up to 20% of the country's GDP. But this heavy reliance on real estate also meant that any hiccups would also mean massive repercussions. And that's exactly what's happening now. And the first big issue is debt crisis among all the property developers in China. You see, what happened with them is easy. They borrowed so much money from the government that they're now having a hard time paying it all off. It's simple. And I'm not talking about a local company or, a company that's not that big. I'm talking about Evergrande. That is Chinese real estate market giant, and they still defaulted on their debts. And as a result, the non-performing asset, which in other words are basically buildings that are not renting anybody, they're empty buildings that have ghosts in them, those are increasing by a lot, and that's putting even more strain on the Chinese financial economy. And on top of that, the demand for commercial buildings just didn't rise after COVID like it did in so many other countries like America. The demand did not go back to its levels that it was at previously before. So what China was left with was a lot more commercial units than actual tenants willing to move in. So property sales plummeted within its main cities, which caused a domino effect and expanded to all of China, especially in lower tier cities where there's already an oversupply of empty buildings, and that left developers with a lot of buildings on their hands and no one to sell it to. That's not a good position that you want to be in. Now, studies from Oxford Economics, they're also showing that these excess buildings that are just not renting anybody, they're going to take 4 to 6 years to clear out. And by the way, they're being generous with that number. It's going to take a lot longer. All right, so enough talking about the problem. Let's talk about the solution. This is what China's going to do to tackle their real estate crisis. They've rolled out several measures to stabilize the market and support struggling developers. So one of the big moves was actually extending financial support for real estate firms until the end of 2024. And I mean, in other words, China's basically going to hand feed the real estate economy and developers $42 billion until they have enough to get back on their feet. They're just going to give them money. So what this money is supposed to do is it's going to help local state-owned companies to buy those properties and then turn them into affordable housing, from commercial to housing. Hopefully that works out for them. Additionally, the government has a comprehensive 16 policy support package, which was introduced in November 2022. And this package is mainly there to boost financial capabilities and boost the confidence that consumers have. And this package is mainly going to help those in financial crisis, and it's going to help with the consumer sentiment, which is a very big thing. You see, the consumer sentiment is so important when it comes to the recovery of the Chinese real estate crisis, because if the buyer doesn't seem comfortable to buy the property, if they don't see an upside, they're not going to buy. And they need buyers who are willing to put their money into the assets. So what the Chinese government is trying to do is they're trying to tell their citizens that there is light at the end of the tunnel. Although the tunnel is very, very long and it seems like it's never ending, there is light at the end of it. So that's why they're doing all of that. Okay, so now let's take a further deep dive into the issue and understand how the Chinese people have been affected over this real estate crisis. So I'll give you an example. I mean, imagine buying a new home, putting down a huge deposit, and then finding out that the developer can't even finish the project because they're out of money. You've paid for the house, but you get nothing. You see, many Chinese citizens have poured their life savings into buying homes. Real estate in China has been seen as one of the safest investments for years, and owning property is a huge part of achieving financial security and social status. But with the market tanking, a lot of these people are really struggling. The property value is going down, and they're stuck with a mortgage that's less than the value of the actual house. And there's only one word that would describe the situation for a Chinese home buyer's perspectives, and that's a nightmare. You don't want to be in this position, yet so many have no choice and they're in that position. So it's not just financial, it's also emotional impact that the Chinese people are having, so much so that they're actually protesting against the communist country. Imagine protesting. That's when you know it gets really bad, because they've been asking for action from the government. Finally, they got it. And now let's bring the situation back to home and see how this compares to the market in America. Although the real estate market in America is not doing the best, it's not as bad as the Chinese real estate market. Let's look into that a little more. Now, it's quite the opposite here at home, because in China, the value of properties are plummeting. So they're going down. Why? Because there's too many houses and not enough buyers. So what that means is there's too much supply and not enough demand. So in America, and again, by the way, every American state is like its own different country at this point, but in America generally, what we're finding is that there aren't enough homes. People are ready to buy in America. However, they're getting priced out because the prices of houses have increased by so much. So in America, there is too much demand and not enough supply. Now, the economists are suggesting that there may be a potential recorrection in the real estate market, but in my personal belief, I think it really depends on the Federal Reserve. So it depends on whether or not they raise their interest rates or they lower their interest rates in 2024, or are they going to lower their interest rates in 2025? I think it mostly depends on that instead of a correction. However, given that there is a recession, no one's going to be able to stop it. And, definitely it's going to help out the market in the long run. So if you guys enjoyed any other videos of mine, please subscribe and I would love it. Thank you so much. I'm trying to get to 1,000 by a couple of months, let's say 3 months, and that would be awesome. So thank you so much and take care of yourselves. Thank you.